Hello, everyone. How are you doing? Happy Friday. Yeah, TGIF. Thank God it's Friday. My name is Clement Nlola once again, and I'm here in this series of Follow the Money. And then in this week, I'm going to look at something very interesting. I'm going to look at the difference between investing, speculating, and gambling. A lot of people are confusing these three terms together, and we need to have a clear understanding. We need to have a clear difference between investing, speculating, and gambling. And in this short video, I'm going to just point out some differences, some key differences that can help you make your financial decisions and help you understand that there is a difference between investing, there's a difference between speculating, and there is a difference between gambling. Now, a lot of forex traders out there are actually gambling or speculating, and they call it investing. In fact, most forex traders are gambling instead of speculating. And there are a lot of people that are into stocks market, they think they are investing, but they're actually speculating, not investing. So I'm going to give us some clear understanding of the difference between investing, speculating, and gambling in this very short video so that you would have a better understanding. And when you're making your investment decisions or financial decisions, you would know exactly what you're doing. You will know whether you're investing, you will know whether you're speculating, or you will know whether you're gambling. And I'm going to mention something you need to look out for that can give you pointers, indicators to help you know that okay, right now I'm investing or I'm speculating or I'm gambling. All right, so let's just go through this short video together, and I hope you pick some lessons in this video. All right, so I'm going to be talking basically on these 3 points: investment, speculation, and gambling. So those are the three things I'm basically going to speak on: investing, speculating, and gambling. All right, so Christopher Brown said something. He said, value stocks, or let's say value instruments, are about as exciting as watching grass grow. But have you ever noticed just how much your grass grows in a week? Now, when you're talking about growing your grass, no, there was a particular time in a fashion trend that people were wearing this jersey that has "My money grows like grass, my money grows like grass," and a lot of people that are putting on this jersey don't actually understand what it means when they say "My money grows like grass." Because when you're wearing a jersey and it's saying your money grows like grass, what you're saying is that your money is taking a while to grow. Grass don't grow that much in a week. Grass grows steadily over time, over a long period of time, steadily over a long period of time. But a lot of people are not actually following that analogy, but they are doing the opposite of their analogy. Your money, if your money is growing like grass, that means you're not looking for a get rich quick platform that would give you 20% in 1 week. You are definitely not like that. But if you are looking for a platform that will give you 20% in 1 week, then you should not be wearing that jersey that says your money grows like grass, because your money is not growing like grass. It is doing the opposite of it. It is growing way, way, way crazier. It's like a rocket that just shoots up into the moon. And of course, it can blow up anytime. All right. So let's start with investing. Now, according to a textbook titled Security Analysis, they define investment as any operation in which there is a thorough analysis and there is a promise of safety of capital and there is an adequate return. So these three things are very, very important. There is thorough analysis. Have you done a thorough analysis of what you are about to put your money into? Have you done a thorough analysis? Have you checked the value that thing you want to put your money into? Have you checked the value? Have you checked out the value? Does it have the value that can last, that can last the test of time? Have you done your thorough analysis? Have you done your due diligence? Have you gone through due diligence process? Have you done your thorough analysis? Is your principal guaranteed? Is there safety for your principal? For your principal, is there safety for your capital? Is there safety for your capital? And what returns are you expecting? What return are you expecting? Are you expecting an adequate return, or are you expecting a return that can blow your mind away? When I mean return that can blow your mind away, I've seen a lot of people who are offering some ROIs in a month, and then you ask yourself that what exactly are these guys doing? That is not investment. And you call it investing. That is not investment. That is speculating. We'll get there. That is speculating. But an investment is something that you have done a thorough analysis. There is a promised safety of your principal, that is your capital, and there is an adequate return. So you need to understand that. Now, of course, you can have some unintelligent investment. When I mean unintelligent investment, that means that you did not do your due diligence, although there is a safety of capital, but the return is not adequate enough. That is an unintelligent investment. Yeah, so you need to understand that as well. Now, speculating simply means that any operation that do not meet the one I just said earlier, the thorough analysis, promise safety of capital, and adequate return. Anyone that does not meet those three is speculating. Now, speculating is despite doing your thorough analysis. Now, listen very carefully to this. After after you have done your thorough analysis, the the thing you are putting your fund into, I don't want to use the word investment now because it's not investment, but let's say the instrument you are putting your funds into still does not promise safety of your capital, neither did it promise adequate return. That is speculating. Now, an example of speculating is the forex market. Forex market, crypto market, they are all speculative market. So despite your thorough analysis, you can do your technical analysis, you can check out the news, you can do all the analysis you want to do. That still does not guarantee the safety of your capital. Neither does it guarantee adequate return. However, you need to understand something. When you win, you may win very big. And when you lose, you may get completely fried. That means you may lose everything. So you need to understand that the forex market and the crypto market are a perfect example of speculative market. So no matter the analysis you have done, no matter how thorough your analysis are, they still do not promise the safety of your principal nor adequate return. That's speculating. Now, speculating there are also unintelligent speculating. Now, speculating does not mean that you don't do your thorough analysis. Now, in the stock market, you can speculate and you can invest. You need to understand that. When you are speculating in the stock market, that means you don't so much care about the value of the stocks you are buying. You are simply looking at the past history of the stock you are buying, and you project that, okay, based on this past history, then this is what you expect to happen. However, when you are investing in the forex market, what you are looking at is not the past performance alone. You are looking at the past performance and you are looking at the current situation, the value the company or the stock you want to buy, the value they have, and you need to understand their financial statement, their financial position, their corporate governance. That's why investing is a lot more work than speculating. Investing requires you to do a lot of due diligence before you put your money into, because your principal will be guaranteed and you get adequate return. But in speculating, you don't need to go that deep. You don't need to go into financial statement. You don't need to go into the value they are offering. All you need to know is that are people willing to buy these things in the next future, and how will you judge that? You look at their past performance, you look at their past history, and you use that to judge that, okay, fine, based on what has happened in the time past, this is what I expect to happen in the future. So you are doing analysis which is thorough enough, but there is no promise of safety for your capital nor adequate return, because you don't understand the value the company is having. Unlike the forex market that also does not guarantee the safety of your principal or your adequate return, you don't know how the market makers are going to bring out the market in the coming week. So no matter what you do in speculating, no matter the thorough analysis you do, there's no guarantee of principal and adequate return. And that is why if you win, you may win big, and if you lose, you may get fried. Now, how do you now win as a speculator? The way you win as a speculator is to have a strict risk and money management. You need to have a very, very strict risk and money management. When I mean risk and money management, I've done a video about risk and money management, so you can watch my video on risk and money management. When I mean risk and money management, I mean that you are very strict about how much percentage you are risking in that particular instrument per time, and you follow through your plan, your strategy. Because any mistake and you are losing, you can lose everything in the speculative market. So you need to understand that as well. So I'm not saying forex is the only place you can speculate. If you are trading stocks, you are most likely speculating as a stock trader. Yeah, you are most likely speculating as a stock trader. You check what channels is saying, you check what Nigerian Stock Exchange is saying, and then you look at which guys are making waves in the Nigerian market or in the African market, and then you just pick their stocks and you hold it you hold them till the price increase and then you sell off for some profit. That's speculating. That's not investing. So you need to also understand that as well. Now, finally, for gambling, gambling is very similar to speculating. The difference is that when you're gambling, there is no thorough analysis at all. There is no thorough analysis at all when you're gambling. So that is the difference between gambling and speculating. Now, speculating is similar to investing in the sense that both investing and speculating requires thorough analysis. However, investing guarantees your principal and your returns. Speculating does not guarantee your principal nor your return. Now, speculating and gambling are also very similar in that both of them do not guarantee your capital and your return. However, the difference is that in speculating, you can still do your thorough analysis, while in gambling, there is no thorough analysis at all. So you depend absolutely on luck, and at the same time, you can make a whole lot of money from gambling. So I believe you have learned something from the three from the three terminologies now. So by now you should be able to know what exactly you are doing. Before you pick a trade, before you pick an instrument, what analysis do you go through? What are the thorough analysis you are putting in place to make sure that you are not gambling? If you are not doing any thorough analysis, then simply you are gambling. But if you are putting in thorough analysis, are you investing or speculating? Are you looking at the value this thing is offering, or you are simply looking at the market trend? Now, there's nothing wrong when you're investing or speculating. The problem is when you're gambling. When you're gambling, you are leaving everything about your fund, your capital to luck. When you're gambling, you are depending absolutely on luck. But you can still speculate and you can still invest. You can speculate and you can invest, or you can invest. You can choose either speculating or investing. So, or you can even combine both together. Let me show you the three. I saw this picture on the internet and I loved it so much because it's kind of summarizes everything I've been talking about. So, when you're gambling, the odds are very, very unfair to you because your reward is not proportionate to your risk. That is what gambling will offer you. But when you're speculating, the rewards are equal to the risk. So the greater the risk, the greater the reward. That is for speculation. The greater the risk, the greater the reward. That's why when you win in speculating, you can win so big. And when you lose, you can lose so big as well. Now, for investing, the odds are very, very favorable because your risks are more than compensated by rewards. That means your capital is very, very safe when you're investing. Your capital is very, very safe when you're investing, and you will get substantial returns over time as well. Now, for gambling, you are simply looking to have fun. For gambling, when you're gambling, you are just having fun. When you're speculating, you are looking for something that would give you a good payoff. And when you're investing, you're looking at steady returns. Can you see the difference in terminology? A good payoff can come in 6 months, can come in 3 months, can come in 1 month. But steady returns will come over time, over the space of 6 months, 12 months, 18 months, 24 months. That's investing. Now, when you are gambling, you are simply you must be wealthy and you are all, of course, you are looking to have fun. You must have enough money. But when you are speculating, you already have the money, but you want to increase the money. When you're investing, you are simply looking to build wealth. I believe you are getting what I'm saying. Now, to succeed in gambling, you need luck. To succeed in speculation, you need expertise in the business. And that is why if you don't learn enough in forex trading and crypto trading, you will keep losing money because you must be an expertise in the business. There are so many things to learn. There are so many things to understand about how the forex market works. And that's why to succeed as a forex trader, you need to be expert in what you are doing. You need to be a professional in what you are doing. You need to treat forex trading as a profession, as a professional career, not as an hobby. But to succeed in investing, you need just a fair understanding of business and common sense. Why do you need a fair understanding of business? Because you need to understand how to identify value in businesses. How do you identify value in businesses? And how do you identify that this value is what the market needs? Not just a value that you are doing it because you love it. It's not enough to do it because you love it. You must do it because the market needs it. So do you have a fair understanding of what your market wants, what your market needs? And you need common sense to succeed in investing as well. Now, if you do very well in gambling, you will make a lot of money. You will make a lot of money. If you do very well in speculating, you will increase your wealth significantly. In investing, if you do very well, you will do fairly well. That means over time you make substantial returns and you'll be fine. You'll be fine. That is why people tell you that when you are investing as a retirement plan, because investing is a long-term goal. When you are looking for something short-term, then you can speculate. But I would never recommend gambling for anybody. Can you lose money? Yes, you can lose money in gambling, you can lose money in speculation, you can lose money in investing. But the difference is that the chances of you losing money in gambling is 90%. The chances of you losing money in speculating is 50%. And the chances of you losing money in investment is like 10%. So you can understand these chances now. Now, in the long run, when you continue to gamble in the long run, you will lose. Have you noticed that people who are not smart enough, who don't have, mark my words, people who don't have financial education, when they win a lottery, they are likely going to go back to being broke after winning the lottery because, like I already said, they don't have financial education. But if someone who has financial education makes a lot of money from gambling, the person is most likely going to invest it straight up to increase, to build more wealth from it. Now, an example of someone like that is FedEx. FedEx got a lot of money from gambling in the casino, and he used all the money he made from casino, he used it to build a company which is called FedEx. So that is someone who is smart and who has a standard or a good financial education. But if you don't and you continue to gamble, in the long run, you will lose a lot of money. And when you're speculating for a long while, in the long run, you break even. You break even. That's why I said the chances are 50-50. The chances that you lose money is 50%, and the chance that you make money is 50%. So you break even in the long run when you're speculating. When you're investing in the long run, you will definitely make profits. You can ignore the small there, you will make profits. You will make profits. Definitely, definitely make profits. So I hope you have been able to learn something in the difference between investment, speculation, and gambling. And I hope you are going to apply what you have watched in this video and share with your friends, share with your family, share with people you like, share with people who want to learn more about finance. And I hope to see you in my next video. Enjoy your weekend.